also know you wanted me to have a chat up, I would assume, so that if people want to know a specific chart, or are you just going to tell me?
Uh, yeah, can you see the chat?
I can. I'm just trying to
Uh,
figure. Oh, okay, now I've got it. All right, great.
uh,
Okay, all right. So, what you're seeing in front of you right now is sugar. We'll get to that, but I'm really hoping because people know that I'm very active. I write it daily. I'm not here to sell anything. The only thing I'll tell you about is I do write it daily, and the daily is something that's available all the time on our website, www.marketcage.com, including if you go to the site, my Outlook 2025 with my top 10 picks and runner-up. So that's what I'm going to encourage you to go have a look at. And yes, if you have any symbols, please let me know. And if I miss them, David, please let me know, okay? Because I can get into it. We gotta start right here. So yeah, I mean, I came always prepared with a list because this is what I do for a living, right? I trade and I look at hundreds of different instruments across all different sectors, from Bitcoin and cryptocurrencies to ETFs to my economic modern family, to the commodities futures, to currencies. I mean, you name it, I look. So I'm an opportunist. But let me start with the two requests I've got right here, and then we'll take it from there. What you can see here is I have a daily setup and I have a weekly setup. So if we go to EHC as the first symbol, Encompass Health Corp, and let's put that. I like to look at both the weekly and the daily setup because you can get a better perspective. So this right now, I can tell you a couple of things that are very positive about it, and then I'll give you one little reason for caution. The positive, obviously, is that we are above the 50. We're in a bullish phase. I look at the 50-day and the 200-day like I look at the 50-week and the 200-week for the phases, and where the price is not only relative to those two moving averages, but where the two moving averages are relative to one another. The other thing I look at is our 6-month calendar range. And of course, this being a new administration, it's particularly powerful this year. This is the 6-month calendar range high, the green vertical bar, excuse me, horizontal, duh. And here is the 6-month calendar range low. So you can see in this particular one, we had a nice calendar range breakout. It cleared the 50-day moving average. We had a nice move, and here we are now in consolidation. The other thing I like to look at is how the instrument is performing against the benchmark, which would be the SPY. That's our leadership indicator. And then finally, our momentum indicator. And very often, this is really where I get a lot of information in terms of should I be in this particular instrument or should I be more cautious because I'm getting a divergence. And of course, the same thing is true with the weekly. It's just a little bit farther out. So what I can tell you with this one is so far so good. I don't think I'd want to be long if we start to break down under the 50. It is outperforming. However, if you look at the momentum here, we broke down under the 50, number one. And notice how here the 50-day moving average is over the 200. Here, the 200 is over the 50-day moving average, which means a bearish divergence in momentum. It's just a heads up. It's not a reason to panic. It certainly would give me pause if I were looking to establish a new position. On the weekly chart, however, if you wanted to give it a little bit more room, obviously this is something that has been following the weekly moving average up since October 2023. It's still outperforming, and the momentum is a little bit better. So that means you could see some short-term volatility. I would be cautious on adding at this particular point, but depending on where you enter, obviously you want to have some level of protection. The next one is IBKR. Oh, interactive brokers. Yeah, we actually use interactive brokers. Okay. So I'm not going to keep repeating the same what these indicators are. Hopefully you can take a listen, but this is really basically the crux of my work, these four things: the phases, the calendar ranges, the leadership indicator, and the momentum indicator. And I get pretty much on these two time frames everything I need to know about a stock technically. And this one as well, not only did it break out of the 6-month calendar range, but you can see this has been in a bullish phase. The slope is up on this one as opposed to the other one being down. Now, what is interesting is when you have two of my indicators converging. So we have a 50-day and the 6-month calendar range converging, which means far away, but 193 would not be an area you'd want to see break down. Outperforming, but starting to underperform a little bit. And this, when you have a move through the Bollinger Band on the momentum and it comes back down, that is a mean reversion to the sell side. We can also have one to the buy side. But in this case, look how it corresponded once it broke down under that Bollinger Band with the actual high, right? So that would have been a good sign to maybe either raise your stop or to actually at least take a little bit of a profit if you hadn't. And the momentum is continuing down, but it's nothing urgent. So what I would say with this one is if we look at the weekly, the information we have here is interesting because we have not had the mean reversion here on the sell side, but we are having an inside week, which means this week is trading inside of the week of last week. The low last week was 209.88. The high was 235. That's the range I would watch. If we break down under 209.88, I probably would be more cautious or at least more protective of my profits. If it gets through here, would I be a buyer? I would definitely want to see the momentum starting to flatten out and going up before I would say this is something that you want to buy for the first time. I think my method is good for swing trading. Yes, you can use it for day trading as well because we do have a momentum indicator that is much shorter time frame. It uses a 10 and a 50. This is using a 50 and a 200. But for this purposes, I assume people know that mainly we're looking at position trading. And that's why I'm going to stick to this chart for now because I only have a half an hour. So I want to make sure I get to everything. Does anybody have any other instruments before I go on and show you a couple of my own? What I'd like to do is do it two ways. One is give you a little bit of a macro view using some of my family. And then two, give you a little bit of my commodities perspective. And then number three, maybe a couple of instruments that I'm finding interesting right now. So I will look occasionally for over here to see if there is any new questions in terms of chart symbols, but meanwhile, I'll keep going. So now with the Modern Family, I didn't want to show them all because we don't really have time. But each one of them, and if we go to a weekly chart, each one of them, like for example, XRT, which is my grandmother of the Modern Family, and I'm going to just bring this one away. Each one of them is having an inside week. So who are my Modern Family members? We have Granny Retail, which represents the consumer. We have IWM, which represents obviously the Russell 2000. Many people started this year thinking that we would see this giant rotation into small caps. It has yet to really materialize, but we can see we're having an inside week to last week, and I'm going to give you the significance of that. Even semiconductors with its move up is still pretty much starting to tackle last week's high, but really inside of last week's trading range. And of course, so is KRE, which is also making a nice move today, inside last week's trading range. So what isn't? Two things would be IBB, which is biotech, which started out really well. Look at how it broke down under last week's low and the 200-week moving average. And then the other one would be IYT, just the opposite, actually took out last week's high, although it's kind of coming back into it. And also not anywhere near the all-time high, but at least doing well. So if you put this all together, what you can really assume from the macro here, as far as sectors and stocks, is that there's still a lot of pause in terms of the consumer, for sure, worried about inflation, as we've seen with some of the consumer sentiment that's come out, rightfully so concerned. Of course, we're right before PPI, CPI, so we'll get more information on that, although those are lagging and they exclude food and energy, two things that everybody seems to have to pay for. And number two is if Granny, let's go back to her. I call her Granny because I kind of like to have characters associated. Let's give her a daily chart too here. So let's go to a daily format here. What I like to look at here is the consumer because of the 70% of the GDP and the inflation impact. I think that even though this has never done in the last several years as well as we've seen semiconductors or growth stocks or the Mag 7, it does definitely mean that when people are buying things, it's going to help the economy. And right now, what we're seeing an inside week, as I showed you, but on the daily, just look at the difference of the two stocks you guys asked me about. We're below the 6-month calendar range. We're below the 50, which is now sloping down. Yet, look at this beautiful convergence. We have the 6-month calendar range low and the 200-day moving average perfectly aligned. We have the 6-month calendar range high and the 50-day moving average perfectly aligned. You can see it's well underperforming. And of course, the momentum, which just went into a death cross, by the way, the 50s below the 200, is negative. So in terms of the macro, we can get excited about transportation. We can get excited about the financials. Obviously, biotech has been hurt. We can get excited about semiconductors trying to hang in there. But we can't get all that excited generally if we do not see the consumer stay in the game. And like I said, it doesn't necessarily mean we'll see a market crash, but it would certainly be information about stress in the overall economy and then what happens as a result. Does the Fed come in a little more dovish than they've been? Do we start to see taxes go down? What happens to the dollar? And all of this, of course, would be separate from what we see in commodities. So that's why I'm kind of looking at all of this stuff together to give you an idea. And one of the best ways to see what the Fed might do, or if we're heading into a recession, or we're heading into stagflation, or we're heading into a period of economic growth, would be to look at the long bonds here. And I'm going to give you a weekly and a daily viewpoint of that because they haven't really been doing very much of anything. But notice how they broke out here on the daily above the 6-month calendar range, got over the 50, but the 50 still has this declining slope, so it didn't sustain. What we look at for risk is how it's performing against the benchmark, and it's right in line. And of course, we do have the same, no negative divergence here or bearish divergence in momentum because the 200 is above the 50, the 200 is above the 50. But this is still hanging closer to the 50 than this. So what I would say is very simple, considering that what I'm showing you about the consumer, considering that we're having inside weeks except transportation, and a lot of that had to do with Uber, considering that semiconductors have made a move, but they're still really beat up compared to where they've been. If we start to see this hold 88 and work its way back up through 90, especially on a weekly basis, excuse me, on a daily basis, but also on a weekly basis, as you can see here, what that's going to tell you now is that, yes, the long bond yields are falling, and we've heard the administration say that they're supporting that without lower interest rates. But for me, it would start to look more like a risk-off situation if the leadership changes and the TLTs start to outperform the SPY. And that would feed you all your information about no matter what it is you're trading, unless, of course, we're going to be looking at commodities. Now, I did see that the gentleman before me covered gold. So I think I'll skip gold. And instead, um, we could look at it from a future standpoint. Or we could look at it from a ETF standpoint. Does anybody want to chime in on which they would prefer me to show? Would you like to look at a futures chart, or would you like to stick to the ETFs? The advantage of the ETFs is that stock charts has all of our indicators, and you want futures. Okay, cool. All right, so you know what? Maybe we can do a little bit of both. And what I'll do is I'll get rid of this so we can just look at a daily chart and go right here to, not that, I'm sorry. Oh, never mind. It's in a separate window. Hold on. I have to bring it over. Okay, can you see that? That's Bitcoin, by the way. But this would be my trading view. Let's take a look at Bitcoin for a second. This is a week. Let's go back to a daily, even though you asked me about gold. A lot of people ask about this too. Notice that what happened with this, and the 6-month calendar range, by the way, would probably be somewhere around here. So we did not break out of the 6-month calendar range. And of course, the 6-month calendar range low would be the January low right here. So we're still sort of in the range, but we've broken down under that 50-day moving average. And notice now that it is underperforming. Oh, here's the leadership, it's underperforming, and also the momentum is starting to shift here a little bit more negatively as this breaks the 200, and the 200 is all the way here. That doesn't necessarily mean this will crash the 200, but it's definitely telling you that between the negative phase change and the momentum starting to be more negative, that we could possibly see a bigger correction in case those people were looking for a buy in Bitcoin. I would definitely hold off. Okay, so now we're going to go to GC, gold futures. We're going to look at the COMEX gold futures. So, this is exactly, I've been I mean, anybody who knows me knows that I have been bullish gold. And I have to say, pretty proud, except for maybe a couple of people that I've seen out there long before anybody else was talking about it. I started talking about it on Fox 3 years ago. At the beginning of 2022, I was asked what was my favorite instrument longer term, and I said gold. And I was looked like I had two heads because I didn't mention NVIDIA or any of the Mag 7 at that time, because I was thinking out that all the problems we've had with debt, etc., government spending and geopolitics and deglobalization and, on and on and on and on, was going to be a real tailwind for gold. And certainly that's been correct. So we had looked at for initial goal was at 2,400. That was a while ago. And then when that broke out, you can see what gold is doing every time it rallies. The weaker sellers come in, et cetera, et cetera. And so it's been a really great day trading instrument for those of you who like to day trade. But for right now, what it's telling me is we got pretty close to 3,000, not quite there. The high was 2,968. I would say at this point, I would be looking for gold now. If it got to any dip around 2890, 2,900, that would be a fresh buy opportunity. And considering the bar of this candle matches the high of the bar of this candle right now, I think we can say if we get back through 2935, we're just a little bit below it right now. That would be a reason to think that we're going to still power through to 3,000. Since we're here on gold, let me though show you a couple of other futures. Let's take a look at silver, because there's two things you should know about silver. One is it's still grossly underperforming gold, number one. And number two is that if that changes for any reason, if silver starts to outperform gold, then we know that we are in for some inflationary times. So essentially, silver, you can see the chart hasn't looked nearly as pretty, but yet we're still in a bullish phase and we chop around. In terms of the real motion, this is the longer term real motion. We did have a mean reversion right at the high. It's amazing how well that works. That's one of our proprietary indicators. And yet here's the 50 coming in. So I suspect that whatever this consolidation is, it could very easily reconcile to the upside. And I would say just over $33 an ounce would be the area that I would be looking at to go higher from. And I still think we can easily, at some point, especially if things get out of control on any of the avenues we know could get out of control, see around 40, maybe even $45 an ounce. The other thing I want to show you, since I'm here, is let's take a look at oil. Because I came into this year thinking that I wasn't really going to be interested in oil at all. And yet here we are now getting through the 50-day moving average, but not quite through the 200-day moving average. And if you look at the momentum, here's the classic example of a mean reversion to the upside, right? We kind of had it here. But it didn't, but at that point, it wasn't all that interesting. You might have gotten a little bit blipped out if you bought it against the 50, but you would have had to sell it if it couldn't clear the 200. This one we're getting now is far more interesting because we made a new low on the recent move, and now we've just gone straight up. So before I go crazy buying oil or any of the oil stocks, though, I do want to see this get through about $74 a barrel. And then the last commodity I'm going to show you in terms of futures is sugar. I'm kind of famous for sugar, those of you who know me, because I've been following sugar forever, and I famously called the bottom of sugar in 2020 at around 5 cents. a pound. And of course, this shot up all the way to about 24 cents, actually higher depending on the contract you were looking at, and then came down and really held some massive support here. Never got below 1750. So why is this interesting me right now? Number one is you can see we're clearing the 50. Now, granted, the slope is negative, but we stopped right short of the 200. Look at our momentum indicator here, though. The 50 is above the 200. Here, the 50 is still below the 200. This is a bullish divergence. So to me, we get a move and a close over this 200, and I'd probably give it a couple of days confirmation. That probably means that sugar futures are not only going to go higher, it will help silver futures. And it's the second of my trifecta, silver gold being one, sugar futures being two, and then the dollar being the third, which I'm not going to show you. I'd rather show you some other stuff, but just watch the dollar under 107.50. Okay, so let's go through a couple of other stocks while we're here, because, after all, we're also looking at a lot of stocks. Let's take a look, first of all, at one of my favorite stocks. Well, let's take a look at something that we had been in, but we have no position on, which is NVIDIA, because it's just so darn popular. Actually, I'm going to change that symbol there because I like to put the hyphen underneath it. So look how perfect this is. I mean, everything that I've just showed you about the indicators here has come to pass. The slope started to go negative on the 50-day moving average. We never cleared the 6-month calendar range high. We did break down here under the 6-month calendar range row and the 200. We started to underperform the SPY, and we started to crash in terms of the momentum, which again has been in a bearish divergence all along, because the 50 is under the 200 and the 50 here in price is above the 200. That's the classic bearish divergence. When people were saying, would you buy NVIDIA up here? I'd be like, no, because I don't like the bearish divergence. So now where are we at? We're starting to see it outperform. We had a second mean reversion to the buy side. We have to at least get through this 50-day moving average on the momentum, which pretty much corresponds with the 50-day moving average on price. So to me, NVIDIA with an inside day today has potential, but not interesting until we clear these several areas. And I am most encouraged by the fact that it's taking back some leadership. So I just felt I had to go with something super popular. What we are in, and what I do like very much, is IBM. So look what happened here with IBM. So IBM, first of all, let's bring this down and let's spread this out a little bit here. We never broke down under the 6-month calendar range low. Here was your 6-month calendar range high. And remember, I said when it converges, it didn't really converge to here after it made its huge gap. But as soon as this peeked its head over the 6-month calendar range high, since it was one of my top picks, remember, go to the website, Market Gauge, and get my Outlook 2025. This was one of my top 10. We got interested and actually bought it before earnings. And of course, you can see the earnings have been great. So what I want to show you here right now is we did, in terms of leadership, come down a little bit, but still well outperforming. And we had that classic mean reversion in terms of momentum, but the momentum's coming back. So I think I have a much bigger goal for this. I think this stock could go at least to 350, maybe higher. I'd be looking now at a move over 260 to possibly get back in. Nobody else has anything else before I'm almost out of time here? No? I'm surprised. Come on, you guys, give me something to look at. So most of you know me, don't be shy. Ah, Fontenay. Okay, good one. All right. Woo. Okay. You know what? This is let me also let me put up a weekly chart here, because we're going to get a little more information on this on a weekly time frame as well. Okay. I mean, this thing just took off, right? So this has been amazing in terms of software. So anything that I see would spook me here. Well, the same thing I showed you about NVIDIA. So be careful here, because you've got the 50 above, excuse me, the 50 is above the 200. Never mind. Never mind. I'm looking at so many charts. We are well above the calendar range. We are well outperforming. Here's what would caution me, not the fact that we have a bearish divergence. We don't. The 50 is above the 200, but that we're getting a little bit of a mean reversion here with an inside day, which tells me that if we break down under yesterday's low, 107.45, am I getting negative? No. But what it would tell me is maybe lock in and maybe look at a move closer to where it broke out from on the calendar range, which would be at about 100. And certainly if you look at the leadership here, it's doing really well. And look at the momentum on the weekly chart. This is a little bit slightly negative in that the 200 is above the 50 here, getting a slight mean reversion. So I hope that helps. Would I be a buyer here at these levels? Probably not. And again, you've got to remember the macro. Keep your eyes on the bonds and keep your eyes on that retail sector, the consumer, and that will help you determine the macro. Okay, next one, Piper. I knew you guys would wake up if I prodded you a little bit. Okay. All right. So, okay, Piper Sandler, right now broke down under the 50, negative slope, broke down on the 6-month calendar range, underperforming the SPY, had a death cross in momentum. So everything about this stock right now tells me that there's some level of weakness, except on the weekly chart, it's better off, right? Look at that. We're holding the 50 in momentum. We're slightly underperforming. So what I would look for on this particular instrument, if we go back to the daily, would be, you can see you had 3 gaps here and it looked great, right? And this is why I showed you those other charts. Of course, it didn't make a new all-time high like we saw in the others. But nonetheless, if this breaks down under 300, I would be definitely more cautious, probably looking for an opportunity around 275. If we can get and hold back of the calendar range high, look how nicely that's almost converging. So figure somewhere between 309 and 311. I might say I would wait for this high to be taken out at around 314, and then I would have a very tight stop to underneath this 6-month calendar range high. Hopefully that's helpful to you. Let's go to snow. Okay, snow. Yeah, I like Snowflake. It's definitely been a hot stock. Let's put it up here on a weekly chart too. So this is a stock that already had made its highs back here and has come off. Notice it's just hitting the 200-week moving average. So that's really an area to be careful for, right? It's pretty simple at this point. You get a weekly close, let's say over this high at 191 figure. That's a good new breakout with a pretty tight stop. On the daily, though, again, look at how nice that's converging here. But that 191 is serving as some kind of resistance, outperforming, and also hasn't been able to clear on the momentum. So all I'm saying right now is we may need a little bit more digestion here before it takes off. I wouldn't necessarily only buy the breakout. I would also be inclined to say that if this gets back down closer to these areas here, around 170 or 172, that might be considered a gift. All right, this is the last one I'm going to do because obviously I'm running out of time. And I just want to remind you about my website again. This is UPS in the IYT transportation sector, an important stock to look at because, oops, I did this twice on the same side, because of the fact that this also pertains, obviously, transportation, how robust goods and people are moving. And we had this horrible earnings report. So that's one of the reasons why this thing really collapsed here. And now, essentially, we're underneath everything. Now, we did get oversold and we had a mean reversion right here. And we had what I call, well, it wasn't a really good reversal bottom. So I would say that it's possible, but look at some of these. That's why I love candles. Around 114, 115, now you've got some resistance. We get through there, maybe we can start to see a move closer back up to the